Welcome back, everyone, to another Kingscrowd Podcast. I'm your host, Brian Belley, joined by Senior Investment Associate Teddy Lyons. Today, we're going to do a quick episode to talk about a couple of things. We'll talk about just some of the trends that we've been seeing in terms of capital raising trends within our basically little ecosystem of Regulation Crowdfunding, Regulation A. We have the monthly report for the month of May 2026. We'll be going through that. In addition, and related to that, we're going to be talking about just some of the broader macroeconomic trends that we are seeing. And the big thing in the news this week, obviously, the SpaceX IPO. If you're interested in more of a breakdown about that, we did break down the revenues last week. In the podcast episode, we looked at just, is it overvalued, undervalued, some of the different things related to that. So let's jump into it. Teddy, how you doing today?
Good to see you, Brian. We don't have Retail Joe here today, which is a bummer. But
I know. It's good. You know, we cover different topics in the online capital raising, investing markets each week. And we at Kingscrowd, as a lot of people who are watching this know, we monitor a lot of the different investment trends, looking at investment volume. So the May 2026 monthly funding report is hot off the presses. And we saw a big pullback in May. Now, before we get into the numbers, I want to say that May tends to be a slower month in every year. It tends to be one of, if not the slowest months in most years. The reason for that is that on April 30th, everyone's financials, if you have an open raise, have to be updated because that is 120 days after the end of your fiscal year if you have a 12/31 fiscal year. So what does this mean? Basically, if you have an open raise, a lot of the open companies will tend to close by that April 30th date. Otherwise, you have to have your audit, your CPA review, whatever else refreshed, and you have to post your CA and or file your CA annual report by that deadline. Now, because of that, what we tend to see is a big drop off. A lot of issuers will close their raises. And so going into May, the 1st of May, there's usually many fewer issuers who are actively raising, which then kind of flows into the investment numbers for May is tending to be lower. Now, that being said, May of 2026 was the lowest amount raised under Reg CF actually since 2021. So we saw a big pullback last month. Now, the total amount raised was 11.1 million under Regulation Crowdfunding, but there's a few caveats to this. Other than the part that I just mentioned about amounts in May being lower than many other months in a typical year. In addition, we had some data delays just on the way that we get the funding data from some of the platforms. And so one of the platforms in particular had about $2 million that was not accounted for. So even if we move all that $2 million that was missing, which that's accounted for in the June numbers on Kingscrowd, even if we did that, 13 million would still be one of the lower numbers. I'm going to pull up that chart. I will show our markets page. But Teddy, any quick kind of hot takes just based on that? Is this, what are you seeing? You look at hundreds of, investment opportunities all the time. Are you seeing any kind of like signs of this slowdown, or is everything that's out there for the fewer number of issuers still kind of just as usual?
I think if you really kind of step back and you'll sort of see and kind of look at the retail investor, there's a lot of competition for the retail dollar right now, like public markets nearing all-time highs. So, investors have easy liquid ways to put money to work without taking early stage risk. But beyond that, there's a wave of the new kind of private market access products. We have AngelList's USVC, Robinhood's venture fund, although that's like very late stage venture, but still they're all at their core chasing the same retail kind of dollars, chasing the same retail attention. And, they're not direct substitutes for Reg CF, but they're still kind of competing for that discretionary dollar. So it's hard to know. I think the fewer issuers this month, like obviously played a big role, but I think something else to look at is there was no like real breakout raise. I think the data said that there was no Reg CF campaign that cleared $1 million in May.
Yeah, I was just taking a look. So if we go to this, none of them actually cleared $1 million last month.
It's kind of like speculation as to like why that is. It could be, because there were none of them in May, companies that had a lot of momentum, they kind of just, they ended their raise in April. They kind of pulled all the demand into April. And it could be that those operators, those founders just didn't want to deal with the extension requirements of new financials and new SEC filings, things like that. It's purely speculation, kind of deciding kind of why this happened. I think at its core, there's just at this point in time so much competition for retail dollars. I think April, even if you look at April 2026 compared to April 2025, it was still like half of what it was. So yeah, 26 million. I think April 2025 was like 45 or 50 million. So I think it kind of speaks to a broader competitive landscape of, where do retail investors want to put their money? I think these days with how well the index funds are doing, there's, these big IPOs coming up with SpaceX, et cetera. Someone with $500 that they might put into an early stage startup, they might just be like, well, we're seeing these massive gains in the stock market. And, there are a lot of times our IPO pops with the big ones like SpaceX. So why not just save it for then? Again, just speculation, but interesting nonetheless.
Yeah. I mean, so first thing I'll call it, just going back to the data, and then I want to respond to a few of your comments, Teddy. I think a lot of people, if you're watching this, aren't aware of this, but you can get all these great monthly breakdowns. So if you're just on kingscrowd.com on the companies page, clicking on the active companies or any of the months here will bring you to the monthly funding reports. Now, from this, you can get a breakdown. You could sort based on how many dollars were raised in that month for each of the companies. Now, obviously, some of these also have raised more than that total. So, for example, Rentberry raised $810,000 just within that month, but they were at 3.8 million roughly total for their campaign. You can go back historically, as we were just looking at. So that's one of the things to take note. If we go to our markets page, just one of the first things to be aware of, you'll notice some of the numbers may look lower here because we're kind of citing that $11 million raised in May. This shows 9.5. The reason for that is this is only showing equity deals. So just have that awareness if you're taking a look at the data here, where this is looking at equity-based deals, so safes, convertible notes, common and preferred stock. But as you can see in the chart, it for equity deals, and it went for overall as well. Again, the lowest number is going back to 2020. Now, if you look at the number of issuers, right, we see this drop every year where when you go from May to June, you get that drop off. You can see here, actually, the number of raises did not really drop as far, even with the close down. So it is telling a little bit of a different story where, the issuers, there are perhaps a little bit fewer of them, but it does seem like some of the investor dollars may have gone elsewhere. And going back to your point, Teddy, we got the SpaceX IPO. I'm showing it here on Polymarket, right? So we've got these prediction markets. There's everything with just all these competing places, as you mentioned, where investors' dollars may be going elsewhere. Now, I think, and again, SpaceX, we broke down that IPO last week. Check out that podcast if you're interested, just to learn more about the revenue streams and everything else. But I think one of the interesting things is in 2021, right, we saw this peak in the markets where there was just tons of investor enthusiasm. But we also saw the crowdfunding markets and everything kind of like retail, at least in Reg CF and Reg A, also went up at the same time. This year, we're kind of seeing that like speculation. We're starting to see some of that more speculative behavior. Again, the markets are at all-time highs. Now, the thing is, I think that might be a little bit different is that if you look at the breakdown of where those dollars are going in, again, I heard this stat probably like a week ago. It's not probably entirely correct, but it's basically if you exclude all, some of the biggest companies that are basically like big tech that have to do with AI, overall, the typical other S&P, whatever it is, 490 or S&P 494, minus those few big companies is basically flat, if not a little bit down for the year. So it's really showing that a ton of those gains for the index funds are just being driven by some of those outsized performers like, NVIDIA and the other big names that are out there. Now, the reason that's interesting is, one, again, total just speculation, as you were saying, Teddy. Mm-hmm. Is it just that some of these investor dollars, are just flowing into some of those big opportunities where investors are looking to gamble a little bit more or go more into call options or different things on some of these, semiconductor stocks? Because if you look at the rest of the broad market, a lot of the rest of the economy even, right, is still kind of struggling. So it's just different behavior than we saw in 2021, because in 2021, the markets, the public markets were at an all-time high, and we were also seeing lots of that with retail and the private markets. Now we're seeing those public markets still at an all-time high, but it's actually hitting lows in the private markets that we're tracking, which is a bit of a divergence, right? Which kind of goes to tell you, or kind of echoes what we're seeing in some of the other public market companies as well, that perhaps aren't doing as well as the indices may be indicating. So I don't know what you think of that, Teddy, but
it's just a crazy time we live in. There's so much going on macro wise with inflation and, cost of goods of so many things going up, but the stock market keeps ripping. Private markets it's your Reg CF. I think it's tougher. It's just a competitive space now with retail, as I was saying before. I think one other thing to note is if you do look at some of these raises, there were quite a few in May that raised like close to their max. Again, not as many of them, of course, but there were quite a few companies that, based on what they were trying to raise in the equity crowdfunding market, they were able to do quite a lot. So, but beyond that, I think, it's going to be interesting to see in June kind of how the rebound is, and kind of comparing that to the June rebound last year and the year before. So I think that'll be June will be an interesting month to break down in a future episode.
That's an interesting trend that you just called out that I've noticed as well. I feel like I've seen more companies, maybe this is just anecdotal again, I feel like more companies are setting lower maxes. Like they're not all going for a 5 million max, where we used to see everyone would always shoot for the 1.07 or the 5 million, right? I don't know if that's a strategy, or it's just, obviously there are additional costs on the financial side. You have to get like potentially an audit versus just a CPA review for your financials. But this one came to mind, Rejuvenate Bio. And again, this is not to say there are not good deals out there. This one got rated a 4.9. Teddy, we could break this down maybe in a future episode, because I know it's one that we're actively looking at and talking about potentially for the fund. But they've already hit their max. They hit, 500K, and they just can transition from test the waters to live at the beginning of May, basically the end of April. So we're seeing a lot of companies that hit their max, may then increase. But yeah, just interesting. I don't know if you've been noticing anything like that as well.
Yeah, I mean, I think there's definitely the marketing side to it, where they can now say that they're oversubscribed, even though it's, just 500K. I think in the case like Rejuvenate Bio, like they're a company that really don't need equity crowdfunding dollars. They're pretty massively VC backed. But yeah, I'm definitely seeing lower maxes. I think that's, whether it's a high max or low max, just average fundraise sizes are just lower than they were in, maybe the early 2020s, where, it was very typical for a campaign to reach $1 million plus. Now it's more and more rare. So
awesome. We could do that as a future analysis potentially for one of our charts, but it might be not a bad thing to look at how the averages. And I know even when we did the annual report last year, I saw quite the divergence between averages of your average equity raise versus averages of your average debt and revenue share raise as well. So where the overall average might, sit somewhere in between, when you split them out, the average for like debt and rev share was, if I recall, it was under 100K. And the average for the equity raises, I think, was actually over 300K for all of 2025, which sounds a lot higher. But then when you put everything together, it makes it look, more in that 200-ish, mid 200s range. So it's kind of interesting to break out and see more of the nuance. All right. Well, I think we will wrap things up there, keep things short and sweet for today. But again, a lot going on in the markets. I do want to just plug a couple events that we have coming up as well for Kingscrowd. So again, if you're in the Atlanta area, Chris Lustrino, founder and CEO of Kingscrowd, and I am going to be there in person on Wednesday. So we have an investor pitch event. We have 5 great companies that are going to be pitching to investors live. Come and meet us in person. Come and meet the founders. If you're in the area, we would love to see you. Head over to kingscrowd.com. You can sign up for that, find that event for Atlanta. In addition, we have a webinar coming up. Let me share my screen, actually. I'll just show a few of these so you can see what we're doing. We're going to be doing it with Zeus companies. So this is a webinar, pull it up, coming up on June 11th. And again, it's going to be at 2 p.m. Eastern. So join us for a conversation with founder and CEO of Zeus. We're going to be just talking about everything kind of behind Zeus passive income. So we're going to be talking about their kind of real estate approach to investing, looking at monthly passive income, wealth preservation. It's going to be a really great discussion between Chris Lustrino and the founder and CEO, Zeus, with Dr. Stephen Kaufman. So hopefully these are all going to be great events. Again, if you're in the Atlanta area, we'd love to see you in person. But all of that is to say we will be signing off for this week. We got a lot going on. And thank you again for joining us on another episode of the Kingscrowd Podcast. See you all back here next time.